Bears are smelly and they poop in the woods. They always assume you're just going to go down to zero forever. They truly don't understand that cryptocurrency is the future, no matter what you say or do. A while ago, I released this video. It's of Sergey Nazarov, the founder of ChainLink, and he spoke about the future of crypto. It's a fantastic video. It goes for 7.5 minutes. He basically speaks about how what we originally thought was there's only going to be 1 or 2 chains. Everybody was wrong. The cryptocurrency industry is going to have multi-chains. It's a multi-chain world. There's going to be chains everywhere, just like websites. And they're all going to have their different purposes. There's also going to be public chains, private chains. The banks are going to use the private chains. They're going to be very shadowy. We won't be able to cross-check anything, of course, but they're going to be using them. They're going to have their own stable coins. They're going to have their own real-world public assets, tokenized assets. And, I have a question here from Jess. Jess says, why do we even need the banks to come in? Crypto projects are our banks. We are tired of the middleman. Exempt them. I agree 100%. Here's the problem. If we stop now, the retailers who bought in the last cycle all lose. Actually, everybody loses. I'm not even kidding. And I really do mean that. There aren't enough retailers in the world to constantly onboard. It will take a very long time. So here I am to explain. US banks have 23 trillion in assets. 23 trillion. On top of that, they are the conduit for financial derivatives. So you have the CME. You have all different derivatives, all the... You know how we have Bybit and Binance where everybody loses their money? Yeah, in traditional finance, there is the CME. That's where everybody loses their money. The commercialers or the insiders are always beating the speculator retailers on average over time. So it's the same thing. They are the hub where everybody connects and everything's going to keep growing exponentially. New value will continue to get unlocked. So if I was to estimate it, 50 to 100 trillion of value gets unlocked. And of course, yes, we want it to happen in the next 18 months, but realistically, it's probably going to take 20 years. I know it sounds like a long time, but I hope I'm wrong and it goes higher. I don't know how we see that higher number, friends. I mean, like the world stock market's 120 trillion. Like if you want to think of a world where crypto flips stocks, oh man, like it just, we gotta calm it down a bit because even 10 trillion, even us going from 1 trillion, so we're right now 1 trillion, even us going to 10 trillion, like that's insane. You're going to have a lot of 100x's. Many of the large cap coins do a 50x, etc. And that's fantastic to think about. But in the last cycle, this move here, in the last cycle, friends, from here to here, this distance, that distance for the average altcoin in the top 100 is 7x to 14x. Okay, not making this up. You can go check it up. In the top 100 coins, this move itself was 7x to 14x. If you measure the exact bottom to the exact top, it's like a 32x in growth. So obviously, no one bought that exact bottom. No one bought the exact bottom of the zombie virus here, and no one sold the exact top. But if you did imaginarily sell the exact top and you got an average range here, you got somewhere in here, you got 7 to 14x. So it's not exactly the greatest thing. You know why? Because the previous cycle was 360x. Sucks, right? If you want to know, in that top 100 coin allocation in crypto, if you chose any coin, the average coin did, I think, 50 to 100x. I'm not even kidding. I think the real number is like 70x. Isn't that wild? I think the actual real number is 70x. So it went from pick any coin, no use case. Like you got dentist coin, you got weed coin, no coin. You got booby coin, 70x. Then when we have use cases, you only get a 7x. What's going on? Well, the crowd is front-running adoption. The crowd is dreaming of the future. The crowd is pricing it in. That's why crypto is often, I always call it, it's a super long duration asset. That's exactly what it is. And that's why it's super important, What are we even super long for? You're this cute little peppy. You got your cute little flower and cute little present. We are trying to front run the banks. It's as simple as that. They print the currency. We want them to allocate. Because you got to think to yourself, okay, what's the difference between if all the retailers buy versus all the institutions buy? At the end of the day, it's still dollars going in, right? The only difference is who got in first. If the institutions get in first, right, the institutions, so it will be drawn by a bug here, right? If the institutions get in first, then we get dunked on. We are the retailers, okay? We get crushed. So what's happening now? Well, remember the phases, right? First they ignore you, then they laugh, then they fight, then you win. Well, what were they doing in the first 2 seasons? They were ignoring, number 1, and then they started laughing, number 2. Guess what? Now they're actually fighting. Part of fighting is they're like, oh man, we got to get a bit more long. We got to try FUD them out. And we win at the end. We do win at the end. But unfortunately, what happens, right? A new generation is born. We're going to have to do another tech in another 30, 40 years, and the cycle will repeat all over again. But we do need those institutions to come in. We do need them. There are Bitcoin miners. There is inflation being paid out everywhere in crypto. You need growth. You can only go so far with retailers because the bags keep getting exponentially bigger. So, you used to need, 1,000 retailers to push up the Bitcoin price. Now, friends, there's $400 million on the offer for Bitcoin. $400 million to push it up 2 to 3%. Like, if the average retailer is buying like $3,000 worth, you need 133,000 retailers just to push it up a couple of percent, 2 to 4%. Wow. 133,000 people. Imagine working your whole life, man. You get 133K people, bang. You can only push it up a few percent. Once upon a time, Bitcoin only had $1 million on the offer. You were very, very early. Think about that. $1 million on the offer. Yeah. And how much money did you need? If let's say people put in $3,000, yeah, you only need 300 people. And then it starts getting affected. See this difference? That's enormous, right? Huge difference. That's why it's important. Remember, and they print the currency. With retailers, we are normies. We drink protein. We consume protein. They go the way of the soy and they eat bugs. Okay, so whether our dollars go in or their dollars go in doesn't matter. But here's the difference. We worked for our dollars. We worked, friends, and there will be a hammer here to signify that we worked for it. We worked for it. They just used the money printer. And it's true, right? They use the money printer. They're in the system. They use the money printer. So, it's our blood, sweat, tears that go in. Super, super important, delicate issue. So we're just in crypto because we are front running them. It's the first time in history where this has happened. This has never, ever happened before. Never happened before. You can even go to the stock market and you can see it for yourself. In history, we've never been able to see something like this. The best thing they've only ever been able to produce is the S&P 500. Why? It's because the S&P 500 is an index. When someone goes really trash, you exit them out of the index. And when someone goes really good, you add them in. You're constantly betting on the winners, the top 500. And that's the best thing we've been able to produce. What rate do you get over the long term? About 7 to 8% compounded. That's the best thing we've been able to produce. Now, 7 to 8% is good, but what if your real wages are still getting destroyed? You're going to retire in 30, 40 years. It sucks. It really does suck. You can't accelerate it. You need to take more risk. Can you take more risk with the S&P 500? Well, people will leverage their homes, unfortunately, and then they'll mortgage it. They'll add more leverage. That's how they'll do it. Very unfortunate. You shouldn't do that ever, 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 because you'll find out when you need to make payments is the same time you've lost your job, same as everybody else. That's how the GFC happened. It's like, oh, everybody was leveraged. It's okay. I'll just pay off the payments. Oh, wait a minute. Unemployment rate went to 8, 9, 10%. It's over. Everybody lost their job. You can't find a job for 1, 2 years. There you go. You had an asset coming in, which was your income, which is like, $4,000 a month back then. All right, now it's down to like $0 or $800. Finished. You see, it's a very tough game, friends. That's why it's important we pay attention. We are paying attention. They've never been able to put a situation where retailers win before. We now have it, but it was a long time coming. We have the internet. We are able to do this. The banking system set up, right? As much as we hate it, we needed it there. You need the banking system. We have the internet, and we all have social media. We can all communicate. For example, you like, subscribe, press the belly button, and all, and you shock the algorithm while squeezing your own belly button. We can actually communicate, and I can teach you about this. Before, no chance. People were buying 1,000 years of price to earnings based off stocks. I had no idea. And even before that. So that's why when it comes down to it, it's all about the number of people. We have about 420 million people in crypto right now. Maybe the next phase we get to up to 1 billion. That'll be fantastic, wouldn't it? So that's what we're playing for. We're hoping this continues. And, you know, to get the infrastructure and to get that in, friends, when there's a lot of people in here, the banks are in. The insiders are in. They're already in, but now they've got to compound in. They've got to pyramid their size in and keep getting more allocated because there's just so much people rotating around. There's a lot of money to be made, taxes to be collected, revenue to be created. It's a new digital economy. So as much as, you know, we worry about, okay, are our bags going to go up or down? We're the powerful ones. They're the ones who eat bugs. And that's why I am very bullish on the crypto industry as a whole. But of course, you've got to hold. If you don't hold, you're never going to see what it's like when we get to the very tippity top. Make sure you like, subscribe, tell mum and dad we love and appreciate them. We are holding for way longer than 1 trillion market cap in crypto. We are way undervalued. It's not even funny. Catch you in the next one.